Well, let's talk about the stock market because it has been a nice start to 2019. The Dow's up more than 2% this year. And we got comments yesterday from the Fed Chairman Jay Powell, the minutes from the last meeting, and that helped to soothe the markets a bit. So we ask, are Wall Street and the Fed finally on the same page? Is the Fed listening to what the market is telling it? And should it? Danielle and DiMartino Booth, the CEO and Director of Intelligence for Quill Intelligence, as well as a former Dallas Fed advisor, joins us now. Danielle, what do you think? Should the markets listen to the Fed? Should the Fed listen to the markets?
Should the Fed listen to the markets, I think, is the real question. A much better question. Investors of this generation, they don't have any recollection of pre-Greenspan days when monetary policy was simply made to reflect the situation in the economy. That is no longer the case. I think that a lot of people were hoping that Jay Powell was going to break the mold of his three predecessors and not kowtow, not placate investors. But he's clearly shown that is not the path that he's going to do. He does appear now to be a Yellen and Bernanke type of clone. What's hard for investors, though, is what is he going to say today? He was hawkish in October. He was dovish in November. He was hawkish in December. And he was dovish in January. I'm literally spinning trying to get that out of my mouth.
Did he lose his credibility?
Oh, I think he did lose his credibility. And one of the things that he had done as a Fed chair, as somebody who came from the private sector, who understood how business was done, was he had not previously allowed the Fed minutes to be doctored. It was fairly apparent, given yesterday's minutes release, that they were definitely massaged, modified, call it what you will, after the fact.
I've never heard that before, Danielle, and I know you used to advise the former Dallas Federal Reserve Bank president. Have you ever seen anything like that before?
Oh, absolutely. In the 2008 transcripts are released with a 5-year lag. Janet Yellen actually said, if the markets do not like the message that was conveyed in the FOMC statement, then we can use the minutes as any other tool in our toolbox. It's a matter of public record that she said that.
So do you think now at this point that the Federal Reserve and Jay Powell are kowtowing to the administration and helping to boost the markets with their new message?
You know, I don't think that Powell is political. He was asked forthright, if President Trump asks you to resign, will you? He had a one-word answer that was no. But optically, it really doesn't make a difference. It does appear now that he is bending to the whims of the administration. And it will be difficult, I think, for a lot of Fed watchers, people who know the Fed's history, for him to win us back via his credibility, given he has been flip-flopping so much.
So many Federal Reserve officials spoke yesterday. More are speaking today. They're sending the same message, that the Fed is essentially on pause. But is the quantitative tightening on pause as well?
That's the big question. And that's what investors are going to be tuning into to listen to today. There were 4 pages of minutes that were dedicated to the size of the balance sheet yesterday. It is clearly the one thing that's on everybody's mind is trying to figure out when and if the Fed is going to pull that plug. Investors have to remember that every single 4 months that go by, every 50 trillion, former central banker, trillion billion, but every single $50 billion of shrinkage, quantitative tightening, equates to, every $200 billion of quantitative tightening every 4 months, we get the equivalent of another rate hike and tighter financial conditions, which the stock market does not like.
So that could be the biggest takeaway or the biggest question that Jay Powell answers or addresses today is what are they doing about the quantitative tightening and how, as you noted, that certainly affects the stock market. Real quick, are we headed towards a recession in your view, Danielle?
I think we are. I think the train has left the station, I hate to say. We've looked at a lot of the labor market indicators, and outside of the unemployment rate, which is the most lagging of economic indicators and wage inflation, we have seen we've seen the data weaken since August.
Okay. Danielle DiMartino Booth, great to have you on this topic especially. Thank you.
Thank you.